Bloomberg Audio Studios. Podcasts, radio, news. You're listening to the Bloomberg Intelligence Podcast. Catch us live weekdays at 10 a.m. Eastern on Apple CarPlay and Android Auto with the Bloomberg Business app. Listen on demand wherever you get your podcasts or watch us live on YouTube.
So the tariff Trump ban definitely came into effect here. President Trump rattled overall markets with a new tariff threat on European goods at 50% now, not liking the pace of these tariff negotiations. Ros Mathieson, Bloomberg News Director in Europe for the Middle East and Africa, joins us now. Ros, how seriously is Europe taking this?
Well, so far the Commission is saying nothing, and that's because they're probably waiting for this conversation that's supposed to be happening today between their chief negotiator for the EU, Mauro Sefcovic, and Jamieson Greer, his US counterpart. So they're laying very low before that call. But what we can sense already is the idea that they see this as a negotiating tactic. And indeed, the US Treasury Secretary Scott Bessent seemed to indicate that a short time ago when he said he hopes it quotes light a fire under the EU, and it seems to just be going into that call a sense of frustration from the US at the pace of the negotiations rather than they are intending at this minute to impose a 50% tariff. And so they're seeing it as part of the realm of the negotiations and the tactics from the US at this point, even though you did see obviously that market reaction. We didn't see a massive move, for example, in the euro, again pointing to the idea that in the market as well, people are interpreting this as part of the cut and thrust of being negotiating on trade. And so we have to really see at this point what happens from that phone call later today.
You saw the social media post from the president. Does Donald Trump have any legitimate gripes when it comes to the EU?
Well, he says he does, and I guess the frustration on the US part is that the EU is just a much bigger economic entity to deal with than, say, getting a trade framework agreement with a country like the UK, where I am. And so these are much more complicated arrangements with a collection of companies, the EU, versus one individual country, and a lot more economic clout on the EU side, arguably, as well. And the EU has its own lines in the sand, be it around agriculture, cars, and so on. And so these were always going to be much more fraught negotiations.
What did the EU propose that President Trump thought was not good enough?
Well, they came back with a counter proposal to the US proposal, to the previous proposal. There's been a bunch of counter proposals, but this is about addressing some of the issues around environmental standards, labor standards, and a framework the EU was setting out to move towards zero tariffs on a lot of goods, aside from things that are seen as very essential, including around agriculture. And obviously that proposal has gone to the US. The US is not happy with it. They're coming back for a further conversation. But again, the message is that Donald Trump obviously wanted these conversations to be moving a lot faster than the reality is the EU was probably going to move. And so now they're leaning heavily on the idea of, Donald Trump saying, I would give you a number, and here is the number. It's 50% if you don't comply. Again, the question is that the new 10%, or is that on top of what we already know? It seems to be would be a flat rate either way. But again, the reality is the US is negotiating at this point with a much bigger economic entity in a much more complicated fashion. So these conversations are always going to take time. And even then, you're just looking at getting a framework, not a lot of the nuts and bolts of a full-throated trade agreement.
Ros, thanks very much. We appreciate it. Ros Mathieson, the Bloomberg News Director for Europe, the Middle East, and Africa.
You're listening to the Bloomberg Intelligence Podcast. Catch us live weekdays at 10 a.m. Eastern on Apple CarPlay and Android Auto with the Bloomberg Business app. Listen on demand wherever you get your podcasts or watch us live on YouTube.
All right, let's get to Anurag Rana. He's Bloomberg Intelligence Senior U.S. Technology Analyst. $3,500 for an iPhone? Question mark?
Yeah, I do not know if that's going to be that high, but frankly speaking, it's going to take years for something like this to be built in the US. There are no big factories here to assemble these things. The one in India started back in 2017, and it took several years for them to even come up with the first one. So not an easy problem for Tim Cook to solve right now. I'm hoping he's picking up the phone and calling President Trump to see how he can smooth the issues out. Perhaps more spend on higher margin items, on chips and other areas. But putting together an iPhone in the U.S. is going to be one tough task.
Is there a credible scenario for production in the United States? Any credible scenario?
No, there are credible scenarios. It depends on how much cost you want to, incur. If you want to run on a very thin margin, yes, you can do it. The real way to do it is to have robotics take care of it. But that's not. I mean, we are not there yet at this point.
The whole point of this is to get workers, jobs created in the U.S.
Yeah, but to think about it, from an assembly point of view, this is not in for anybody's, liking a high margin or a high profile job. You're just assembling phones. I mean, I know what it means from a marketing point of view, but, you're better off spending money on high-end semiconductor chips that are several $100s worth in a phone. A few $100s of labor, from one side to the other does not really add up to the benefit of, anybody, either the US or Apple. What's going to happen is people are going to gravitate more towards Samsung phones because the cost differential is going to be so wide. So it's not easy to go out and do these, what I would call as the lower end consumer electronics products compared to some of the high end, data center stuff or things that have much higher capex involved with them.
So if I'm taking a look at Apple stock, we're off the lows, but we're still down like 2%. Should an investor just completely ignore these headlines at this point?
No. In fact, on the contrary, this is no longer about US and China. This is concerning because this is a direct, you could say, direction towards Apple and say, well, you are not doing enough. Let me see what you're going to do now. So don't go by the 25% because if Apple doesn't go out and fix this problem, this rate could go up even higher. So it's more so directed towards one company, which is very unusual for us to see, frankly.
What has changed, do we know, in the relationship between Donald Trump and Tim Cook? Because as I said before, they kind of got a pass the last time around.
Yeah, I'm not privy to those discussions, frankly. And, one of the things I remember, we just heard that he did complain in one of his speeches that Tim Cook wasn't around with him when he was, visiting the Middle East. So I do not know what's happened behind the scenes, but definitely not the best time for Apple in terms of their government relationships. So that's why I'm saying I'm hoping that they, pick up the phone, figure out whatever the deal is, they make it, they spend the extra money and take care of whatever the big, lingering issues are.
So now no one's been able to answer your question. So that leads me to believe that you need to go research this, Tucker. Nobody knows what has changed between Tim Cook and President Trump.
Again, I was filling it for you.
He's just going to rub salt in this wound. So Anurag, just, for you to know, Paul's out today. So John Tucker comes in and says, I'm going to be you. Alix, you're Paul. You do all the work, and I just sit here. And I am continually offended by this.
We really started off on the wrong foot.
We really did. Anurag, see, he's laughing. He knows that's not true. Anurag, I appreciate you. Anurag Rana, Bloomberg Intelligence Senior Technology Analyst.
You're listening to the Bloomberg Intelligence Podcast. Catch us live weekdays at 10 a.m. Eastern on Apple CarPlay and Android Auto with the Bloomberg Business app. Listen on demand wherever you get your podcasts or watch us live on YouTube.
Alix Steele here alongside John Tucker. Paul Sweeney is off today. This is Bloomberg Intelligence Radio. We bring you all the top news in business, economics, and finance. We are broadcasting to you live from our Interactive Broker studio right here in Midtown Manhattan. Check us out on Roku, on our smart TV, our originals content, as well as YouTube.com. The stunning headline, I sound like Tom Keene, but the stunning headline from yesterday that really truly was a jaw dropper all across the newsroom was Harvard University in its latest conflict with President Trump. Harvard now suing the Trump administration over the Trump administration's decision to block the school from enrolling international students, and that affects 27% of the student body. Gautam Mukunda is executive fellow at Yale School of Management. You just put this into context of what this could mean for a school like Harvard that not only relies on the brain power of the 27% of the student body, but also the money of the 27% of that student body.
So this is potentially very damaging for Harvard, which of course relies not just on the money and the brain, right? These are money and brain power. So these are some of the best students in the world. But there will be a Harvard for a long time after this. Universities are incredibly resilient. Oxford, if you go to Oxford and Cambridge, you will see niches in the walls that are empty. And if you look into the back of the niche, you see shattered remnants of sculptures because Oliver Cromwell's soldiers stormed the universities and shattered the images. Universities survive lots of things. The damage here is not to Harvard, it is to the United States. Just back up for a second and think about this. Imagine that the Chinese government decided to attack an American asset that generated tens to hundreds of billions of dollars in economic value every year, that was the single most important institution in securing American leadership in science and technology, and that also took in the next generation of global leaders, exposed them to the best of the United States, and indoctrinated them in American values, and then sent them home. If the Chinese government decided to attack an asset of that value, we would expect the United States government to go to war to defend it. And instead, it is the United States government that is doing it to itself.
And beyond the economic contribution of these students, there are other components too. This is sort of like, I mean, would you think that it's sort of like the United States shooting itself in the foot?
The United States shooting itself in the foot would be kind compared to that. This is the United States shooting itself in the stomach. Let's put this in perspective. Just recently, Nature identified the 10 top research universities in the world. So the 10 universities in the world that contribute the most to science and technology. Only 2 of those 10 were American. The other 8 were Chinese. 8th was MIT, and 1st was Harvard. There is no way to be globally competitive without leadership in science and technology. And the Trump administration is attacking the institution of the United States that is most successful at doing that.
So how does this then play out? Clearly, this will be tied up in the courts forever. And there was a stay from a California judge overnight. But if I'm an international student, why would I even take the risk at this point? Like, the brain drain can start now.
Yeah, I mean, so this is clearly lawless by the administration. It is clearly pretextual. So in Kristi Noem's letter to the Harvard, there is not a claim of any laws being violated. It is simply a bunch of demands. And I note that in Secretary DeVos's letter to Harvard explaining why they were taking earlier actions, anti-Semitism, which is supposedly the reason all of this was done, was not even mentioned, right? This is clearly pretextual. This is not to say that Harvard hasn't made mistakes. Of course it has. It's not to say that Harvard hasn't handled issues badly. Of course it has. But none of this is about that, right? And so from the perspective of not just students, but also top-tier researchers, right, who are dependent heavily on federal funding, they're going to be thinking about leading. And here's the irony of all ironies. Hong Kong Technology has already announced that they will accept students and researchers who are refugees from Harvard on favorable terms. The Trump administration is taking the best minds in the world and trying to make them flee to China.
Is there time for them to even transfer, as Kristi Noem or whomever in the administration said they should do?
You know, it depends on the person. It depends on the student. But there are people who are devastated right now. I'm getting emails from former students who are in tears, who don't know what's going to happen to them. And surely the cruelty is part of the point. I mean, let's be clear. This is not, Kristi Noem said this herself, this is not about Harvard. This is about an attempt by the administration to break American higher education to its will, right? It is trying to seize control of American universities and get them to become organs of indoctrination. And that's not me claiming it. That is literally what Kristi Noem has stated in her statements, right? So yeah, this is going to go a lot beyond Harvard. And you may leave Harvard and find out that it chases you to wherever you go next too.
How does this affect, this comes from our producer in the control room, how does this affect those that are graduating next week? I mean, if you're an overseas student, like, do you wind up getting that degree?
I mean, my guess is that Harvard will be able to get a stay in place for the next week, but no one knows. The cruelty and the chaos this is imposing is not accidental. It is the point. They are trying to inflict as much harm as on everybody because it is an object lesson for everyone else, right? Harvard has more wealth, more power, and more institutional strength than almost any other sort of organization in America. I mean, this side of Bloomberg itself, Harvard may have more independence from the federal government than anyone else. If they can break Harvard, then they are sending a sign that they can do it to anybody. And that is the message that this is trying to convey.
Not to mention the network of pretty powerful alum. Where do they come in on this, and how can they help?
Mm-hmm.
So the alums are sort of consistently, not all of them, but to a huge amount rallying. I'll tell you something that I said that I've heard also back from many other people. I first got tied to Harvard in 1997 when I was admitted as an undergraduate. And, I was there as a student. I was there as a faculty member. I'm at Yale now. So, some mixed feelings about this because of that. But I've often been proud of being associated with Harvard because it said something about me, that they admitted me or whatever. But I've often been skeptical about Harvard because it seemed focused on, maybe money or ambition over ideals. There are always things to criticize there. This is the first time in my life that I have been proud of Harvard. Right? I have been proud of the fact that the university is clearly taking a step up and saying, we are the front line of defense of American democracy, and we will hold the line. And I cannot tell you how many alums have said to me they have never felt this good about Harvard as they have at this moment.
Wow. All right. Well, we really appreciate that. Thank you for joining us, Gautam Mukunda, Executive Fellow at Yale School of Management, joining us on the latest news from Harvard and the Trump administration and where we go next.
You're listening to the Bloomberg Intelligence Podcast. Catch us live weekdays at 10 a.m. Eastern on Apple CarPlay and Android Auto with the Bloomberg Business app. Listen on demand wherever you get your podcasts or watch us live on YouTube.
We have a special guest for you in studio. Really happy to get this perspective. Marcel is a Chile Finance Minister. He joins us in studio. There is a Chile Day event. This is a yearly conference that promotes Chile in the international finance market. What is your pitch to investors right now?
Well, this meeting has been happening every year for, I think that 15 years so far. Every year we have a special focus. This year is basically that the Chilean economy has fully rebalanced from the disequilibrium that was left after COVID-19, that we have our house in order. The economy grew to 0.6% last year, and that we are prepared to continue growing. But of course, we are facing the risks that everyone does these days. But Chile appears to be better prepared on a number of dimensions to face that juncture.
All right, now be honest with this next question. You just heard Kevin Whitelaw talking about, does the rest of the world think the United States is nuts? That's a legitimate question.
It is.
Can I
yes,
can I
know.
use the Fifth Amendment?
Okay. All right. Since you're going to take the fifth on that, and by the way, I have to say, just parenthetically, on my bucket list is a visit to Chile.
Okay. Well, you're talking to the right person, it looks like. Not me.
What is it? The driest desert in the world, I believe, right?
Yes, sure. And but right now, that desert is home to
a very large telescope, appropriately named, among other things.
Yeah.
So for science geeks, that's the place to go.
Telescopes. Wind power, mining, copper mining, lithium mining, all of that is in the Chilean Ocean.
Chile is one of the largest copper producers in the world, if not the biggest.
And lithium, too.
It's number one.
Can I talk to you about the dollar, the weakness in the dollar, and EM currencies like the peso have been on a tear. Your thoughts on the dollar weakness, and then whether or not you have to scale back purchases of U.S. debt as a result of that?
Yes, well, the way we see it is that, in the balance between the dollar as a refuge in terms of uncertainty and the issues that concentrate on risk coming from the U.S., the second is weighting more today, and that is what has been weakening the U.S. dollar.
So we mentioned the commodities that Chile produces, et cetera. Just how is that going? And I say that glibly, but what I mean is that the tariff negativity globally has disrupted a lot of investment decisions, disrupted a lot of long-term contracts or demand. What have you noticed?
Well, we have a very strong pipeline of investment projects in mining, particularly in copper. Those have multiplied by 5 for the next 4 years in the course of a little more than a year. Basically because the long-term price of copper is expected to remain pretty solid. And there will still be a lot of world demand for copper coming from electromobility, from technological changes, from construction in some countries. And actually the price of copper has remained pretty strong in the last few months, even in the face of the tariffs
Does
discussion.
where you send that copper from Chile, have that changed at all?
Well, our copper production in terms of metal as cathodes goes mostly to the U.S. We are the main supplier of copper cathodes to the U.S. market, and therefore a very important supplier of U.S. manufacturing. And the copper concentrate is basically demanded from China, given that China has the largest smelting capacity in the world.
Has the quality of the ore, have you been able to maintain that?
Well, a large part of investments are aimed at compensating for the declining quality of ore as mines get older. So that means that in Chile we're planning to have a lot of investment. Part of that will compensate for that, and other part will increase the volume of production. We expect to grow production by 1 million tons from 2022 to 2030.
In the range of possibilities for the election, what there are elections at the end of the year.
At the end of the year,
What
yes.
does it mean for investors? Because there are the current president, your boss, her term is up, correct?
Yes, we don't have a re-election in Chile, therefore there will be a new president. But
the range of possibilities, what does that mean for investors?
Well, so far it looks like the investors are very positive about the sort of the structural strengths of the country. They don't see any major policy changes coming up in their areas, like in this case copper or energy or other key sectors in the Chilean economy. So in the last few days, we have had announcements of pretty large projects. Total announced a 16 billion project on green hydrogen and ammonia in the far south. We had Amazon Web Services announcing $4.5 billion in data centers. The digital industry infrastructure is growing pretty much in Chile as well.
How does that impact domestic inflation when you have a lot of industry then coming down?
Well, demand is pretty much in line to the economy growing more or less at 2.5%. Inflation is pretty much under control. We had some upward pressure coming from the normalization of electricity tariffs that were frozen during the COVID-19 crisis. But we expect inflation to go back to the central bank target of 3% by the beginning of 2026.
Are you going to stick around in your job through the end of the year, or like what's your...
Well, I will stay there as long as the president needs me. But I mean, we have so many things to do. We have, further fiscal consolidation to implement. We have announced just an additional package of incentives for new investments in the country, and of course dealing with the negotiations with the U.S. on tariffs and trade.
All right, Mario, thanks a lot. We really appreciate it. Thank you so much for joining us, Mario Marcel, Chile Finance Minister.
And on the way home, I will be stopping to get some Chilean wine because it's very good.
It is.
He agrees.
A recommendation.
Okay. Is he going to give you a recommendation? Yes. Well,
real quick?
Off air, we'll get some recommendations for some good Chilean wine. That's a great idea, John Tucker.
The best.
Amazing. Price to quality ratio.
This is the Bloomberg Intelligence Podcast, available on Apple, Spotify, and anywhere else you get your podcasts. Listen live each weekday, 10 a.m. to noon Eastern on Bloomberg.com, the iHeartRadio app, TuneIn, and the Bloomberg Business app. You can also watch us live every weekday on YouTube and always on the Bloomberg Terminal.